and welcome to this very special series, Finance Made Simple. Joining me today is Akshay Dhand, who's the appointed actuary at Canara, HSBC, OBC Life Insurance. Thanks very much, Akshay. Pleasure talking to you.
Thank you, Vivek.
Akshay, we keep reading reports about insurance premiums going up because of the pandemic. You are the right person to answer that as the appointed actuary. How do you see premiums moving from here on? On the one hand, we know for a fact that premium rates are fairly low in India. Is there a catch-up already expected? Is COVID the reason this catch-up will happen? How do you predict premium rates going from here on, say, for example, over the next 1 year?
Okay, so basically, I'll split the question into two parts. What is the general trend in premiums as far as insurance is concerned, and then what has COVID done to it? So, if you look at the general trend in insurance premiums, I'll cover both savings and and protection elements separately. On the savings side, what's happening is, as you notice, that the interest rates have been falling over the year, and I don't see them rising anytime soon. And when interest rates fall in the economy, generally for the same amount of benefit in an insurance product also, the insurance company will have to unfortunately charge a higher premiums. So there would be some impact of falling interest rates on the premiums in case of savings, traditional savings or guaranteed savings products are concerned. So I see that happening at some stage during this coming year. When we look at the protection side, so what has happened over the last few years, like you said, the protection premiums in India had really gone down. The competition was fierce. There were a lot of players in the market vying for that space, and it had really it had gone to a very low level. Now some course correction is happening because, and this was kind of bound to happen because when the premiums went down so low, the protection went to the masses. And when protection goes to masses, obviously, the mortality experience does go a little worse or adverse versus what has been priced for. So as a result of that, what's happening is now there's a course correction happening, and you will find term assurance premiums going up, not because of COVID. This is purely because of the fact that over the last few years, the protection market has become wider and wider, and it has reached the masses. And once it reaches that kind of segment, it is bound to increase a bit. So that increase is happening. It's already happened in parts last year. It will continue to happen for this year as well. So there are the two aspects which are happening besides COVID. Now, what COVID has done actually, and initially we thought that the mortality, cost of COVID is going to be fairly low. But what we are noticing is that it is contributing somewhat more than what we initially thought it would contribute. So I guess there will be some impact, albeit not very significant, but there will certainly be some impact of COVID on life insurance premiums because it has caused an upsurge in mortality. Not just because of COVID, but a lot of people after having contracted COVID and recovered from COVID are actually becoming more prone to their existing comorbidities. So as a result, their probability or the mortality expected out of that population is somewhat increasing. So as a result, you will find some increase in mortality premiums at some stage over the coming year because of COVID as well. So does that answer your question?
Yes, absolutely. And thank you very much, Akshay, for coming by and sharing your perspective with the viewers.
No worries.
As always, a pleasure talking to you. Thank you very much.
Same way. Thank you so much, Vivek. Thank you so much for having me. Bye-bye.